This is Back Roads of Illinois server to farmers and ranchers in central Illinois and the Midwest. Today is edition of Back Roads of Illinois. We were bringing you lasted for farming sources and information sponsored by AgriGold. We're glad you're here on a Thursday afternoon. I am Cesar Delgado. I am your host of today's program. We were talking about the fly-in for nppc in Washington, D.C. with Lori Stevemer from National Pork Council. She went to testimony of the Farm Bill and the labor situation. Then we were going to have a conversation about the commodity markets with John Heinberg from TotalFarmMarketing.com. Otherwise, this is your rural news sponsored by AgriGold in central Illinois and the Midwest. On Tuesday at 11, we're having the World Supply and Demand Report from USDA. The report is behind the Planting Intention Report from Monday. The Grain Stock Quarterly Report is bullish for beans. This Wednesday, I have a question about the trade barriers to the U.S. Some farmers is already taken to ensure that it will be greater hassle about the tariffs. Ethanol production is up for today. Secretary Brooke Rollins was visiting in Iowa for Monday. She seems very interested in the biofuels in the Midwest. The secretary wanted to work with the biofuels industry. That's your rural news for this afternoon. This is your commodities markets update for this afternoon, sponsored by Kyle Bumstead from Allendale Incorporated. Corn and beans, wheat are mixed. May corn is down at 5 to 8 cents. July corn is up at 5 to 8 cents. September corn is up at 3 to 6 cents. Soybean futures is under pressure on today with deferred on the trade deficit. May beans are down at 4 to 6 cents. July beans are down at 5 to 4 cents. KC May wheat is up at 5 to 9 cents. KC July wheat is up at 9 to 4 cents. Chicago May wheat is down at 5 to 9 cents. Chicago July wheat is down at 5 to 10. Let's see what happens in the livestock markets. April cattle is down at 3 to 10 cents. June cattle is down at 3 to 9 cents. May feeder cattle is down at 8 to 10 cents. July feeder cattle is down at 3 to 6 cents. April hogs is down at 9 to 4 cents. June hogs is down at 5 to 4 cents. This is your commodities markets for this. Well, nppc is going to be in Washington, D.C. for meeting with lawmakers for the fly-in for right now. Here's Lori Stevemer on today's program for the nppc. Hey, Lori, how are you today?
I'm doing great, Cesar. It's good to be with you again.
Me too, as well. Okay, Lori, what is your top priority for the fly-in for right now?
Yeah, we have our fly-in in DC next week, and we've got really two priorities. First of all, getting a Farm Bill passed and continuing to advocate on why we need that to happen. Second of all, I would say with the recent actions on tariffs, we're going to continue to discuss the importance of trade and exports to our industry and continuing to opening up those new markets. And, especially we are concerned when we talk about tariffs, the retaliatory tariffs that might be put back on the pork industry. About 25% of our pork is exported. That's about $66 per head in value. Many countries like China take what we call our pork variety meats, which are cuts of pork that we don't eat here in the US. So being able to export those products really helps add value to our carcasses and our industry.
Do you have any concerns about these tariffs?
I would say we're more concerned about retaliatory tariffs, what the countries would put back on us. And so that's why the discussions we have with them is really key. We've got good relations with Mexico and Canada, and it's good to see that those tariffs have been paused as part of USMCA. But we have other opportunities, especially in Southeast Asia. So we want to continue to impress upon the importance of opening up those markets or keeping them available to us as we have visits with the administration and staff.
Uh, 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 uh.
Yeah, it's important because we love to have pork.
Yes, we do. Yes, we do.
How is the fundamentals on the Farm Bill for right now? Of course, it is the top priority for right now.
Yeah, there's been a lot of discussion on the Farm Bill and the four Ag Committee leaders. So, Chairman Bozeman, Chairman Thompson, along with ranking members Klobuchar and Craig, have all really agreed that the Farm Bill is a priority. And there's a lot of discussion going on right now. That's why they had some hearings a few weeks ago. A lot of what they're doing for right now is just working through the funding of the program and how do they meet the spending targets that they've been given.
What is your top priority on the Farm Bill for your industry?
Well, when we look at the Farm Bill, it's important to us because it contains the federal solution to Prop 12. So California's Prop 12 is concerning because of the potential for a patchwork of regulations. So that was something that I really stressed when I spoke to both the Senate Ag Committee and the House Subcommittee on Livestock. I would say also another priority is just funding for what we call our three-legged animal health stool. So that's funding for our national lab network, funding for veterinary supplies, and a vaccine bank. So all of those are really key to our industry.
What are we going to see for next couple weeks ahead with the Farm Bill and some ag labor, of course, with trade issue?
Well, we're going to see continued discussion on the Farm Bill, and you've seen a little bit of it in the news with Bozeman and Senators Bozeman and Representative Thompson meeting. So there will be continued discussion on that. I will also say that in terms of labor, still an important issue to us. Fortunately, through the work of NPPC, along with some of our farmer leaders, they had an opportunity to meet with the State Department, talk about the TN program, and we've seen some improvements in the TN visas being accepted. But farm labor is still a concern. We still need labor in agriculture. All of agriculture does. And that's why we're going to continue to advocate for visa reform. So we need those H-2A visas to be able to have year-round status. I would say once again, we talked about retaliatory tariffs and how challenging they can be on our industry. We need to continue to have those conversations about where can we find new markets for pork and where do we have some entry into the market, but we need to expand that. So those will be the key issues for us over the next few weeks.
Can you tell our audience about the 10 program? What is that program?
The TN program is a classification of foreign-born workers that would come from either Mexico or Canada. And this is a skilled worker. Those individuals work as animal breeders on our farms. And so very important function that they perform at a skilled level. And so that's why we need to continue to have them be able to come in and work on our farms. And there was a period of time where the approval process for those TN workers was lower, had really dropped off quite a bit. So that was putting some stress on our farms, not getting those workers in. As I mentioned, we've had great conversations with the State Department. Our farmer leaders got involved. Our staff has done an excellent job, just showing what those breeders do on farm. And so it's good to see that those TN visas, the acceptance and approval of those has increased over the last few months.
Do you have any final thoughts about flying in for next week?
Yeah, I just think that these fly-ins are really a great example of the grassroots engagement by our farmers. And, many people will say, oh, I couldn't live in Washington, D.C., and that may be true, but coming in to DC and talking about what's going on our farms is really key. And I've said it in the past, the world is run by those that show up, and we need to keep showing up as farmers. We need to be there talking about what we do on our farms. We need to talk about how these policies affect us so that those legislators can understand how those rules and regulations affect us. So always great to see all our farmers there. There'll probably be somewhere around 120 producers from all over the country coming in, and just a great opportunity to show the importance of the pork industry to Washington, D.C.
Thanks, Laura. That's Lori. Thanks, Lori.
Thank you, Caesar.
That's Lori Stevemer from National Pork Producer Council for today on Back Roads of Illinois. I'm going to be joining with John Heinberg from TotalFarmMarketing.com. Hey, John, how are you today?
Yeah, I'm very
Discuss about your thoughts with the Planting Intention Report on Monday. Can you describe your thoughts on it?
apologize there. Forgetting we have more questions coming. So let's just go back to obviously a busy day today with the what I call the post-Liberation Day hangover from the announcement of the Trump tariffs. We'll get into that in a little bit. But with that, we got the Planting Intentions Report to start the week off. So this has been one of those weeks, big USDA data dump with that and grain stocks coming out at us on Monday. Corn acreage coming in at that, 95.5 million acre number, just above what the market was anticipating. Kind of where I was leaning in my mind was a higher bias than pre-report estimates, and that seemed to be confirmed. But really the corn markets handled it fairly well, just because of the demand side of the equation that we're seeing on the old crop. That if we put numbers into the balance sheet, we're still not really ballooning carryover to the level that it could be a concern. If this demand stays strong here going into the end of the first, end of the spring. So that's where we, at least on that side. On the soybean side, 83.5 million. Again, a little bit below what the market thought, a little bit under what the USDA outlook for them was. The market really hasn't done a whole lot with that. I mean, we had a nice move a couple days higher there because of the soybean oil market, but the bean market really hasn't responded to that lower acre number. I think the biggest concern there is even at 83 and a half, maybe we're still looking at a few too many acres out there in terms of bean production, especially if demand were to dry up complete with those competing South American beans, and just a lack of sales that we kind of have on the books for new crop beans kind of makes me a little nervous for the fall. If demand falls apart, that carryover can stay close to that 400 million bushel level. But with that smaller acre number for beans, if the weather does become a negative in terms of the crop developing, does make this market very, very vulnerable, probably for some aggressive market bounces if we do see some inclement weather going through the planting window or into the summer and things of that nature. So balance will be the key here.
How is the beans futures for today from yesterday? I'm wondering about that for today.
Yeah, obviously the soybean market reflecting the strong move to the downside today, all tied to the Trump tariff announcements that came out yesterday afternoon late, as we got that broad sweeping numbers of tariffs getting put on our basically soybean exporters or importers in that regard, excuse me. So, obviously bean market went back, sold off fairly aggressively today, and especially after the rally was, like I said, driven by soybean oil the past couple of days on just some more friendlier news in terms of that biodiesel mandates that could possibly come down the pipeline, but we saw that money pour into soybean oil the last handful of days and put a pretty good rally together. So again, with that, now we've got some concerns regarding trade. Obviously, we got a big global and world supplies, South American beans still out there. Those are things that kind of weighed on the soybean market as we finished kind of near the lows of the day today. So we'll have to see how things kind of go here. May challenging $10, November beans 10.17, poking closer to that $10 level. We got some support that needs to hold there, or this bean market could be in its play for another step down.
John, could you tell us about that with the fundamentals from the beans markets?
Again, biggest thing for in the near end of things here, we're going to be watching what the next couple of USDA reports do. Demand for beans has been better than anticipated and caught up the stockpiles a little bit there. We'll see if there's enough for the USDA to make an adjustment on demand on that April or the May report. But right now, I kind of sensing they'll still be patient on that because obviously we need to continue to sell beans as we go into the summer months. And with that South American crop, Brazil and Argentina combined being as large as it is, and where the price points are right now is still very competitive for those beans to be purchased from those two countries versus the United States. So we'll have to watch that going forward. If the USDA doesn't make adjustments, that 380 million bushel carryover will stay relatively happy, and that'll limit any upside potential in that soybean market. New crop side we'll get in May when we get the next May report, and then we'll figure out what's going to be the 25-26 numbers. And again, it all comes down to where the USDA thinks the demand's going to be. Right now with the Outlook Forum, they're forecasting an increase in exports year over year. I'm a little bit negative on that thought process, especially given where we are in the global scheme of things and those competing beans from South America being out there. And now throw the tariff play in there. I think that export demand may stay relatively steady year over year, which could keep carryover still in that 350 to 400 million bushels category when we start seeing those new crop numbers coming out in the May report.
What is your thoughts with today's trade deficit? Do you think about the technical buying in play with the feeders?
We had it going into the day. We saw some real good money flow into the cattle market as just felt like the buyers wanted to be buyers and lifted things up here with prices. But unfortunately now maybe number one, the trade war issues weighing today, seeing that money run to the sidelines, $4 down on the feeder market, $2 plus down on the live cattle market, plus watching some of the other fundamentals, cash trades coming together here. Sounds like we're going to be steady to slightly lower again this week. So that could be just a negative trigger in the cattle markets right now. So market seems a little bit vulnerable, obviously, with what's going on the global scale and the sell-off in the markets in general. Tomorrow may be a very important day in the cattle market. If we break some of these support levels we tested today, that could bring out that technical on the selling side of things, which could just see as a correction despite the fundamentals. I still think in the long run, though, any type of price correction in the cattle market probably is going to give producers an opportunity, if you've made some sales, to put a little reownership over top, or try to protect yourself a little bit with some upside protection overall.
I have watched the prices. What is your take on the feeder cattle for right now?
As I just kind of stated again, big break today. Just got to take a look at the charts a little bit here. I mean, obviously feeder cattle numbers are tough, but this is not a good close today in terms of how the market behaved, our lowest close, and realistically since the end of February on that feeder cattle market. feels like those front end contracts, April, March, mainly more, or excuse me, April, May, my apologies, may have a little bit more room to go here, especially that May contract. Wouldn't be surprised if we can't hold this like 281 area on that May feeder. There's a chance that this thing could break down fairly quickly on technical selling. I would say your first downside target, which we could land at, is probably around 275.
And you give us your final thoughts on this planting intention report?
Again, now we get into the planning window. I mean, we got the numbers, kind of what most of the market anticipated with that bigger corn number and smaller bean number. Now we got to take a look at what's going to happen in terms of the planning weather. We got things of that nature. Obviously, big storm coming across the middle of the country this week, putting a lot of rain in areas that don't need any more for this window. That's going to probably put some delays in. The report's out there now. Now we got some numbers to work with. Again, in May, we'll get the next picture for the 25-26 marketing year with those first intentions. Again, with trend line yields in there, which realistically might be very, very difficult to reach. So let's get some, that at least gives us the point where the goalpost is set in the ground and we can go from there. Again, I didn't see anything that I thought was extreme on the report other than just those extra corn acres, which, like I said, I think the market was anticipating when we went into those numbers.
Thanks, John. I'm sorry about Wisconsin for the tournament.
Yeah, we gave it a heck of a run. It was a fun team to watch this year, but still tough for us to get at that level and play against some of them athletes. But I'm actually good friends with the head coach down there at Wisconsin, know him well. He's working his tail off to make Wisconsin even better for next year.
Illinois is well worth.
Yeah, I see the Illini kind of stepped out about the same time Wisconsin did. Now Michigan State's gone, so get to watch the NCAA finals with at least no Big Ten teams in there. But given the fact that it's the 4 top seeded teams in the whole tournament, should be a fun bunch of games to watch this weekend.
Thanks again.
Thank you, Caesar, and we'll talk to you soon.
You've been talking with John Heinberg from Total Farm Marketing on Today. Thanks to Lori Stevemer from National Pork Council, and also thanks to John Heinberger from TotalFarmMarketing.com. I'm Cesar Delgado. You have a good day.